for us. Here's what we want to make sure that you know is that you can text your questions at any point in time. Maybe you have some questions about some things that have already been shared, or maybe there's going to be a question that comes to your mind during this session that we have here as we prepare to go into our last session. This is going to be an absolutely incredible one. They're last, but they are certainly not least. We are excited to host them here with us today to provide information that will lead us forward, to have us encouraged and empowered. So we're looking forward to our time together. Won't you clap it up for Dr. Lee Jenkins and his wife for sharing together with us today. We're so grateful for the gift that he is. Well, with no further ado, I want to introduce to some and to represent to others a couple. One of the things that Dr. Lee shared was that a couple that prays together and can talk about money together is a couple that's built to last. And these individuals we're bringing together from Brown Assets Group is a couple by the name of Darius and Jocana Brown. Won't you clap it up for them as they come at this time. Let's keep clapping for them, Change. Let them know we're excited to have them here together with us.
Good afternoon. Good afternoon. Good afternoon. How's everyone feeling this morning? Well, this afternoon, look, I'm already thinking it's still morning time. Yes, indeed. Yes, indeed. Well, before we introduce ourselves, we would love to give it back to Pastor Darius Daniels as well as First Lady Shamika Daniels. And give it back to you all, right? Give it back to you guys because you could be anywhere, but you're still here, right? So, again, my name is Darius Brown.
And I'm Jocana Brown.
And we are from Brown Assets Group. Now, by a show of hands, how many individuals understand the power of credit? Let's be honest. Oh, wow.
Oh, yeah, we just heard about it. So we know that credit is very, very important. And before we get into our presentation, we want to share a little bit with you all on how we got into this credit repair space, which was from our own trial and error, our first home buying process. And Darius is going to go ahead and share a little bit about that.
For sure, for sure. Also, Pastor Lee, man, he dropped some major gems, right?
I'm so full, yes.
And something that he mentioned is understanding your resources, right? A lot of times we can be curious on information, but allergic to execution. And what I mean by that is we can be here, we can be in proximity, we can have these resources, but if we're not applying it, it doesn't matter. We have to be very intentional, and that was something that my wife and I, we decided to do back in 2019. We started Brown Assets Group because we bought our first home. We were oblivious to the power of credit, right? The biggest expense in life is what we do not know, and we simply didn't know. So we bought our home with a 580 credit score. Yeah.
Yes.
580 credit score, full transparency, right? And we ended up finding out after we moved into the home that our neighbor was paying $900 less than what we were paying for the same exact house. So if you do the math, that's close to 11 grand in 12 months that we're paying in addition because we simply didn't know and we didn't take the proper measures to get our credit where it needed to be. Make sense? So we sat down, I said, babe, listen, we gotta come to the drawing board and we gotta rent this house out. So we ended up renting the home out. We moved to the city and we said, you know what? We're never gonna make this mistake again. And we're gonna get our credit in order. We're gonna get our finances back. We're gonna educate ourselves. We're gonna educate our children. And we're gonna educate our communities to gaining their buying power back. And that's exactly what we did.
Absolutely. To the city we went. Actually, a background story on me is my career for 14 years was in the property management industry. And so as a community manager, I used to decline individuals daily because they didn't have substantial credit to even rent an apartment home. So wanted to be a part of that solution. And so all of this, our first home buying experience, being a community manager, declining people daily because they don't have substantial credit to get into an apartment, allowed us to realize how crucial credit truly is. And so now we have a passion to come back out to the marketplace and educate. So we always say we don't only fix credit, we educate and we change lives, right? And so here you can actually see some of the seminars that we've held, educating. We have our little one here in these pictures because it definitely starts with our little ones. Darius and I always say we don't live for our first names, we live for our last names, right?
Yes, indeed. Look at my baby girl. Look at our daughter, Nevaeh. Wow. So she was about 4. As you guys can see, it was in the middle of the pandemic. She has the mask on, right? But we teach our kids the matters of personal finance, right? Our daughter is 9. Our son is 4. But they've been authorized users on our credit cards since they were young. And here's the thing. Pastor Lee said something very intricate, and I want you guys to hear me out on this, right? Money talks, good credit holds conversation. Money talks, good credit holds conversation. What do I mean by that? Number 1, you cannot be oblivious to your finances, right? Number 2, you need to implement a monthly budget. So if you don't know where your money is going, you're gonna live in this hamster wheel of making the same mistakes with your finances. We can't hit a target that we cannot see. And that's something that we dealt with. We dealt with it because we were swiping, not having a budget in place, not understanding the matters of personal finance, and we got caught behind the 8 ball. So again, we don't live for our first name, we live for our last name. So it's not about Darius and Jocana, it's about the generation after us. We're teaching them, we're teaching our children something, let's be honest, they're not gonna learn this stuff in school, right? I went to college, but I accumulated thousands of dollars in student loan debt. Mommy's telling me, son, you better go to college, you better get a degree, but I didn't have a game plan. I didn't even finish college, but accumulated over $50,000 in student loan debt, right? And when I came home, right, to start a career, I wasn't even making $50,000 annually. Make it make sense. Like, think about that, $50,000 in student loan debt, and I'm not even making that in my career. So a light bulb clicked. So we educate our children, having them go to the bank, setting them up with checking accounts, having them go in and depositing their own funds inside of their bank account.
Yes.
Okay?
Absolutely, absolutely. And so we're gonna get right into it. Let's talk about it. What is credit, right? Credit refers to the capacity to borrow funds or obtain goods or services with the expectation of repayment at a later date. Really simple, we can simplify it. At the end of the day, if you're someone who's looking to purchase a home, invest in a business venture, whatever have you, the lenders are looking at 2 things. Are you an asset or are you a liability? Okay? And the way that they determine that is very simple, based off of your credit score. Okay? We don't only focus on the credit score, we go deeper than that, right? We focus on your credit profile. What makes up those 3 numbers? What makes up that credit score? And as long as you can be able to understand those data points of how credit is factored, then you're gonna be in a really great position. So we're gonna put this up, your credit profile and score factors. Feel free to take a picture of this. We are gonna go over all 5 ways of how your credit scores are calculated, okay?
If we can move to the next slide, if you all don't mind.
Perfect. Yep. The next one, yeah. So while they'll pull that up, I'll go right into it and we'll discuss how what those 5 factors are. So we're gonna start with the very first one. 10% of how your credit is calculated is due to types of credit. Okay, we're talking about installment loans here, which include car loans, personal loans, student loans, etc. Okay, so that's 10% of how your credit is factored. Okay, another 10% is new credit, which is what we call inquiries. You want to be very mindful of this. Okay, Pastor Lee Jenkins talked about this too. Okay. Be careful who you're allowing to run your credit, how many times you're running your credit, especially if you're in the process of wanting to purchase a home, which is several of our clients, right? we can see literally everything on their reports, okay? And so when we tell them, listen, during the credit repair process, don't run your credit, and we pull up their updated report and we saw they went to the dealership and got their credit ran, and they thought, well, they only ran it once. No, they didn't.
No, they didn't.
They ran your credit about 15 times from what I see, right? So it's really, really important, especially when you're trying to reach a goal. You want to be very mindful that your credit worthiness is up there, okay? The next factor is 15% of how your credit is calculated is credit history. And again, Pastor Lee also talked about this. If you have a credit card that you opened up, I'm 35 now, I have a credit card that I opened up when I was 18 years old, and I still have that credit card open. Why? Because 15% of how it's calculated, of how your credit is factored, is your history. So by closing out the account, essentially what you're doing is you're stripping away that history. And by stripping away that history, what's going to happen is that credit is going to go down, right? So be very mindful of that. You don't want to close those accounts out, okay? If you paid them off, you don't want to use them, understandable, okay? But there's another thing that you also want to understand, okay? You want to use them at least once or twice a year, because if not, the bank can go in there and close them out themselves due to inactivity. Okay, so be very careful with that, because again, if you've opened up a credit 5, 10, 15 years ago, you want to keep that history, okay? The next factor of how your credit is calculated, 30% is the amount owed. Very simple, your utilizations, okay? Credit card utilizations, okay? Rule of thumb is keep your credit utilization below 30%. At Brown Assets Group, we say 10%, okay? And we do this with all of our clients. Why? Because there's just something about telling our clients 30%, and the next thing you see is they're at 42%. Well, it's not that bad. I know, but I said below 30%. So now everybody 10% and below utilization. That way, if you go a little bit over, you still have a little bit of cushion, okay, to where your utilization is still low, because that is a very big chunk of how your credit is factored. 30% utilizations, okay, and we have control over that, okay? And then the last one of how your credit is calculated, 35% of that is your payment history, okay? That is by far the biggest one. So it's super, super important to ensure that you are paying everything on time. All your debt has to be paid on time. Why? Because one late payment can drop your points anywhere between 50 to 120 points. Imagine all the work that you put in to gain your buying power, and you miss one late payment and risk it going down 120 points. Okay? So it's really, really important that we keep up with those 5 factors of how your credit is calculated and have a very clear understanding on it. Because essentially, excellent credit, right, it's going to get you higher approvals, better financing options, low interest rates, low insurance rates, and so much more.
For sure. Now, think about it. The average consumer only goes based off of one credit score, typically TransUnion being the main bureau hub, right? But understanding you have 2 other credit scores out there, right? Now, if you're shopping for a home, the lenders typically go off different FICO models, right? You have FICO 5, FICO 8, FICO 10T. We go off of the Vantage score, which is designed by the credit bureaus, right? So essentially, Pastor Lee said something very interesting. It was deep, because he talked about your insurance score. How many of you know that you have an insurance score? Yep. Wow. How many of you know that you have what they call a hiring grade index score? Which essentially is, if you're looking for an employment, they're gonna look at your grade index score to determine whether you are hired for that employer, right? But how many of you know that you have an insurance score which is associated with your auto score? So if you're shopping for auto coverage, they're not just looking at your driving history to determine your monthly premium. They're looking at your insurance score. So based off of your credit score, if your credit score is in the 750s and up, your insurance score is going to be high, which means you're going to pay a lesser premium than someone with a 550 credit score. Make sense? So this is why we say credit is power. You can save so much money simply by understanding how to properly leverage your credit, okay?
Absolutely, absolutely. And we're going to get into some statistics, okay? We'll read the very first one. Americans currently hold a credit card debt of over $1.8 trillion as recently reported by the Federal Reserve Bank of New York. That's 1.8 trillion, not a million, not a billion, $1.8 trillion. Okay, Americans are drowning in credit card debt right now. Okay, so it's really important that we understand, hey, utilizations, got to keep them low. Got to make sure we're paying them on time, right? Two important dates, and I'll let you elaborate on those two important dates when it comes to your credit cards, okay? There's two dates that you always want to focus on, okay? It's going to be your closing statement date and your due date, right? Your due date is the date that you have to pay the minimum. Your closing statement date is the date that reports to the bureaus. So if you have utilized your credit card and it is 60% utilization by that closing date, guess what they're reporting to the bureaus? 60% utilization. Okay, so you want to ensure that by that closing date, your utilization is below 10% utilization.
Yes, so we have a strategy for our clients where once they have identified their due date and their statement closing date, let's say they have a balance of $300. We advise them to pay $150 3 days before their due date, and the other remaining $150 3 days before their statement closing date. So when it reports to the credit bureaus, it will look like you made 2 consecutive payments within that billing cycle, which essentially is going to increase your scores drastically. And we'll get into our built-in simulator that our clients leverage, so you can have not only the context, but you can see the visual of how our clients are able to reach their credit score goals like that.
Absolutely. The next statistic is approximately 40% of consumers are unaware of their credit scores or the information contained in their profiles. So let me ask you all, how often are you all checking your credit score? Like, do you all check it frequently? Yes, frequently. Good. Keep checking it frequently, okay? You want to make a great habit out of constantly checking your credit reports, okay? Which is going to lead me to my next point. Every 2 to 3 seconds, an individual falls victim to identity theft. Okay, that's every 3 seconds. This amounts to over 8 million victims annually, resulting in a total financial impact of $57 billion each year for individuals and businesses. Okay, it's really important to leverage a credible credit monitoring, right, that allows you to see your credit profiles, where you're able to go in there periodically and ensure that everything that's on your credit report is accurate. Because if it's not accurate, then we got a problem, right?
You want to treat your credit report like your adult report card, because essentially that's what it is. We're not talking about checking your credit report once a week. You need to check it every single day. And we're going to debunk this myth that if you check your credit report, that it's going to hurt your credit score. That is not true. You can check your credit report every 5 minutes if you want to. Because ideally, you want to ensure that the creditors and the credit bureaus are only reporting accurate information on your credit report.
Absolutely. And so the next statistic is 80% of personal consumer reports contain inaccuracies. Again, why it's so important to make a habit out of always checking your credit report, okay? Therefore, in many instances, when a negative element is present, it can be challenged immediately, okay? Challenged and eliminated. And you ask how? Well, we're gonna go ahead and get into it, okay? What we're looking at here is one of the consumer laws, okay? The Fair Credit Reporting Act states, and we can actually, I encourage you guys to take a picture of this because this is a really good gem. Identify the provisions of consumer law regarding inaccuracies. Okay, the 15 USC 1681I treaty regarding inaccurate or unverifiable information. In general, if following a new investigation under paragraph 1 of any information contested by a consumer, it is determined that an item or information is accurate, incomplete, or unverifiable, the consumer reporting agency shall, not maybe, possibly, they need to, shall promptly eliminate that information from the consumer's credit report, consumer's record, or amend it as necessary based on the findings of the new investigation, and promptly inform the provider of that information that it has been modified or removed from the consumer's record. Very easy. If the bureaus cannot verify the information, they have to delete it. And they don't get 6 months to try to verify it. They don't get 3 months. They get 30 days. Okay? So if there's inaccuracies on your credit report, if they've reported things duplicate, if there's a misspelling in an item, if the bureaus aren't reporting the same exact information, that's an inaccuracy, they get 30 days, okay? So we want to definitely make it a great habit out of, checking our credit reports.
And understand this. TransUnion, Equifax, Experian, they're not government entities. They are paid private businesses that get paid by the original creditors to place negative items on our credit reports without our authorization. I call them chatty patties because the creditors and the credit bureaus, they like to talk back and forth.
Yes.
They're simply in business to make money off of us because they know and understand that the average consumer is not checking their credit report as frequently. So we're here to educate you all. Make sure you have a reputable credit monitoring provider. And at the end of our presentation, we'll have a QR code that you can scan. And we'll be willing to conduct detailed credit analysis for those that need assistance or some type of clarity or roadmap to help you understand where you're at.
Absolutely, absolutely. And so I want to show you guys an example of an actual client, okay? If we can put that slide up. It's one single account that's reflecting 10 inaccuracies, okay? So this is one of our clients. Of course, we have their personal information blocked off for obvious reasons, but this is one account that reflects 10 inaccuracies. What do I mean by that? Well, if we look at the first item, TransUnion says this client owes $367, I'm sorry. Equifax says $200, and Experian says 0. Well, if I owe 0, then I owe 0. That's what I'm gonna go by, right? So which one is it? Okay. Date of last activity. We can see TransUnion and Experian reported June 1st, 2019. Equifax is about 6 months delayed. They said December 1st, 2018. Which one is it? This is enough. This is suffice to challenge the bureaus to get this debt off of your credit profile, to get this negative item off of your credit profile. So I challenge all of you, after today, check your credit reports. Look for those inaccuracies, okay? And if you have goals, is this upgrade year? I heard this was upgrade year, right? So we gotta get this information and we gotta execute on this. Don't sit on this information, okay? The gems are being shared with you all. So definitely I challenge you guys to look at your credit reports and make it happen, okay? Because the solution is definitely there.
I love it.
Okay? The next slide, I wanna show you all what our detailed credit analysis looks like, okay? So what you're looking at on the first item where it says score tracker, that is a client's current score after 30 days. Because below score tracker, you can see they actually started with a 477 credit when they got to us. Imagine somebody coming to us with a 477 credit score, wanting to purchase a home, and they just got denied, right? They don't have hope, they're bummed out, and we let them know, wait a minute, no, let's do this analysis, okay? Let's go over this. Let's see how we can help you get into your home. So they see they're at a 477, and then they see that future score projected at a 764. Now they're like, ooh, how do I get there? Well, let's talk about it, okay? The score builder, where it says plus 90, that's typically where the negative items are factored into, and we go over that report with the client, right? Score boost is where the revolving lines of credit are factored into, so credit cards, right? So when we're looking at this, we're seeing that by eliminating the negative items off their credit profile, they're projected a 90-point increase on top of bringing down their credit utilization or paying their credit card off. That's an additional 168 points, which will bring them to their future score of a 764. Now let me show you how they can get to this 168-point increase.
Documentation beats conversation.
Every single time. So here, what it's telling our client is, client, okay, or whomever, if you pay $315 on your credit card and they have one credit card, which is a Credit One credit card, it is letting them know that you will receive a 168-point increase simply by paying down that credit card. Why so much of a jump? Because 30% of how your credit is calculated is your utilization, and you only have one credit card, right? But furthermore, it's helping him out. It's letting him know, hey, listen, I'm gonna tell you when you gotta pay it by, because I know your statement date. So it will literally let you know the amount to pay, when to pay it by, and when you can see that update reflect. $315 on that credit card to get you to a 168-point increase. Won't you do it? Absolutely. So this is the education that we want to be able to bring here today, the value to share with you all so that you all know how to properly, number one, read your credit reports, and number two, definitely encourage you all to maintain that utilization as low as possible, especially if you're in a position where you're trying to reach a goal, okay?
And understand, so many consumers are walking around with high balances simply because they don't know this strategy. They don't realize, like, wait a minute, I've been working with this credit company, I've been doing this, doing that, and my score won't budge. We're showing you. We're showing you, and we're giving you the information. So make sure if you have credit card debt, right, that you identify exactly where you're at, and we are giving you the roadmap, right? Again, it's our responsibility on giving it to you. It's your responsibility on what you do with it.
Absolutely.
Make sense? If we can go to the next slide. Thanks.
Yes, and so we work with customers that have tax identification numbers too, tax IDs. A lot of my clients are Spanish speaking, hence why I speak probably kind of fast. But we work with tax IDs, we work with Social Security, so anybody can absolutely be building positive history, okay? And again, next slide. Like we always say, documentation beats conversation every single time. So these are some of our client success stories where you can see their increases. That 214 increase always gets me because, wow, I remember that story. In the next slide, you're able to see the investigation results. So investigation results, all it is those are the deletions that come directly from the bureaus. So in these deletions, you can see that, you know, student loan late payments were deleted, public records can be deleted. No, you don't have to wait 7 to 10 years to get those collection accounts deleted, bankruptcies, whatever have you, okay? If there is if it's been reported on your report and there's inaccuracies, we can challenge the bureaus. Okay. Next slide, you can also see some more increases, the results that our clients receive. They can see how many items have been deleted, how many points they've gotten as far as the increases. And then one of the things we're very big on is we're very big on communication. We love to check in on our clients, of course, and make sure that they're getting the results that they need to ensure that they're getting to their goals, right? So in one of these top right, I believe, of course you can see, hello Jonathan, this is D Brown, which is Darius. He goes by Darius D, I don't know.
You can call me whatever you want, just don't call me late for dinner.
he was checking in on this client, and so as he said, your credit specialist, I'm following up to see if you had any questions regarding the credit restoration process. Please be sure all of your services have been activated. Please feel free to contact our home office or me directly. Look forward to assisting you in reaching your financial credit goals. Thank you. Client response, so far things are going well. Credit score has increased almost 200 points since we've began the process. That is the rewarding feeling for us. So it is.
Absolutely.
Thank you.
And this is when we initially started the credit journey of helping other people. We were like the test dummies. We worked on our own credit. We saw
And our
that it
family.
worked. And then we started to say, you know what? We want to go out there and help other people. I'm a firm believer, and I'm pretty sure my wife can attest. As long as we position other people to win, God's going to ensure that we win by default. Make sense?
Yeah.
So we understand that our industry has this negative connotation to it because people, Pastor Lee says something, you know, watch out for the scammers. And we get it so much where people are like, I work with a credit company and they didn't do their due diligence. Where we're not other companies, we're Brown Assets Group. And what we're gonna do is we're gonna, number one, we'll never set false expectations. And we're gonna ensure that we set you up with a realistic roadmap, right? That caters to you and your current situation. Because everyone in here, your situation is different.
Yes.
Right? So I can't give you, right, the same roadmap that I would give him.
Yep.
Make sense? So this is one of the reasons why we set you up with the realistic roadmap to say, hey, if you're willing to trust the process,
Yes.
understand that this is a legal process, let's make magic.
Yes, because it does take time, right? And that is the purpose of us conducting the detailed credit analysis, is to allow us the opportunity to go over what's on your credit profile so that we're setting up those realistic expectations. Because if you come to us and you say, hey, I need to get to a 750 in 30 days, but you're sitting at a 500 credit score, well, listen, we're not the company for you, okay? I'm gonna say, don't call me, you're gonna have to call Jesus on this one, because we can't help you, right? So it's really, really important to also understand that everything has a solution, okay? So look at your credit profiles. If you see something if you don't understand something, if you have questions about it, we're here. We're more than happy to answer your questions. We're more than happy to serve you to your buying power. But again, this is upgrade year, so we gotta make it happen, okay? Next slide, just some more client success stories, credit card approvals. And then, of course, the next slide would be us. Our children are on our credit cards. So again, we are a product of the product. We will never tell you something that we haven't done ourselves. Okay, we are our own testimony, and we're really here to tell you that, listen, you can make it happen. You can absolutely gain your buying power so that you can get into a position of reaching whatever goal it is that you have set for you and your family. You can be financially free. Okay. Not only do we work on personal credit, but we also educate on business credit. So how many business owners, entrepreneurs do we have in here? Oh, yeah. Oh, yes.
Awesome.
I love it. I love it. Yes. So Dee's going to share a little bit on some information and give you some insight, really good insight on building business credit and fast.
I'm so proud of you. Wow.
All right, quick fun fact. So my husband isn't only obviously my husband, he's also my business partner and my direct mentor in this credit space. So I do a lot of speaking, but it's always in Espanol because the bulk of my clients are Spanish speaking. So I can, thank you, honey. I appreciate that.
I'm so proud of you. Yes, yes. She's amazing. We are business partners. We're husband and wife first, right? Our business is not our identity, right? We are devoted husband and wife, devoted parents, right? But our mission is simple. We don't just fix credit, we educate and change lives, right? We instill hope back into our communities, right? I wasn't taught this growing up as a kid. My mom was a single mom raising 2 boys. And what she would tell, I would see her and I would say, Mommy, what are you doing? Mommy is just balancing out her checkbook until we get paid in 2 weeks. $20 to hold us over. So when I say passion, It's crazy because I was just telling PD and First Lady, 2 months ago, I manifested being on the stage.
And he did.
2 months ago. So when you do the right thing, like Spike Lee, and you move with integrity and you move with good intention, and you don't make it about yourself, watch God work wonders in your life. So a lot of times people come to us and they're like, hey, I want to build business credit. Number one, understand that your personal credit needs to be substantial, right? Again, the lenders are going to assess two things. They're going to assess your credit report, but they're going to identify two things, whether you're a liability or an asset. Why should I give this individual a $100,000 loan if they haven't established good faith, right? So your personal credit needs to be substantial. Okay, we can go to the next slide. Oh, well, actually, yeah. All right. Now, for the business owners in the room, is your business registered by a show of hands? Properly registered? I'm gonna emphasize on the properly. Right. State of Georgia, okay, in your respective state, all right? Okay. Understand when you're building business credit, number one, make sure business formation is clear across the board. Make sure everything is good. Make sure you have a business checking account. Make sure you have set up your Duns and Brads number, right? How many of you understand and know about Net 30 accounts or Net 55 accounts? Awesome. So essentially what we do is we explain to our clients exactly when you are setting up your Net 30, Net 55, Net 60, that is designed to help you build business credit, right? Essentially what that entails is you purchase a product or anything pertaining for your business and they invoice you. The vendor will invoice you and you have a certain time to pay that invoice back, right? Before they report it to the bureaus, all right? So tier 2, gain access to major credit cards, all right? So our objective is clean up personal credit, right? Help you establish business credit so you can go out there and gain maximum funding to break down those financial barriers and to scale your business. Make sense? All right, so we have what we call an Experian credit scoring model, which ranges from 0 to 100. Low risk is where you want to be, 81 to 90, all right? Minimum risk, 91 to 100, and maximum risk, 80 or below. You don't want to be there, right? You don't want to be there. And here's the thing. You can get here within the first 45 days. See, building business credit is not as complex as it may seem. You can get there fast. You just have to have the right information, right? And you have to just do your due diligence to ensure that your business is properly formatted and registered. Awesome. And I'm not gonna go through each slide in detail just for the sake of time, but I wanted to show you all this as far as how credit scores are designed. So you have something called a pay debt score. Is anyone familiar with the pay debt score? Okay. So with your pay debt score, which is tied to your business, that needs to at least be at an 80, okay? Your experience score needs to be at least at an 80 as well. And then your Equifax business score ranges from 101 to 992. So like with our personal credit, where does personal credit start? What's the lowest on the personal credit side? 350, right? What's the highest?
850.
All right, so with your Equifax business, it starts from 101 to 992. The higher, the better. That way you all receive better financing options, okay? All right, so when you're building and creating your Net 30 accounts, rule of thumb, you need to have at least 5 revolving accounts. 5, all right? And at least 3 net 30 accounts, okay? And here's the thing. When you are building business credit, understand this. You're gonna need a PG. What's a PG? A personal guarantor. This is why it's essential that your personal credit is substantial, okay? So the business reporting is Experian Business, Equifax Business, and Dun & Bradstreet. How many of you have already created your Dun & Bradstreet number? Awesome, see, you guys are on it. That's what I'm talking about. All right, so here's a list of net 30 vendors that we leverage for our clients. We even leverage for ourselves in our business. How many of you know about NAV Business or heard about NAV Business? I see a few hands, awesome. So NAV Business is similar to like Credit Karma of credit monitoring. This is how you're able to see where your business is trending. You're able to see your cash flow. You're able to see your paydex score. You're able to see what loan and funding options you're able to receive from the lenders and the banks. So this is an absolute must-have when you're building business credit, and it's absolutely free to create an account, all right? And the cool thing about it is when you're leveraging it, and they also have different products that you're able to leverage as well. Let's say if you get what they call the Prime NAV card. With the Prime NAV card, it's similar to a secure credit card. Well, unsecured credit card, excuse me. When you're utilizing that credit card for your business, only for business purposes, right? They will report to the business credit bureaus, which still works in your favor because you're building your business credit, right? That's what we want to do. We want to build your business credit, okay? Now, let's say who has a t-shirt business? Anyone? T-shirt business? You definitely want to look into Shirtsy. Shirtsy, you got it? See, boom. I love it. Construction, anyone in construction? No construction? Back here. Uline, Granger is a great, great vendor, right? You don't have to come out of pocket. Leverage your vendor account, let them invoice you, and just pay it back, and you'll start building business credit over time, all right? And here's a list of other vendor accounts that you're able to leverage. Bill, we use Bill to invoice our vendors, and it reports to Experian. If you are in like the logistics industry, trucking industry, A to B fuel card for fuel, you can leverage that as well. That reports to Experian. Sam's Club member card, you have to be a Sam's Club member. But here's the cool thing about having a Sam's Club member card. Number one, you have to wait 30 to 40 days before you apply for the card. It's EIN only, no credit checks, and no PG required, all right? And this also reports to Duns & Brad Experian Business. So definitely want to look into that. And if you're looking to do like home improvement or anything in that field, Floor & Decor is another vendor account that you can leverage as well, okay? All right. So on a final note, oh man, we're good on time, 3 minutes. So on a final note, no matter how solid your business credit is, like a personal guarantor, like you need it, right? It's unavoidable. So understand personal credit. And then what we want you guys to do, all we ask for you to do is take this information and pass it to at least 5 people. This is what we call exercising group economics, right? This is what if we literally take this information and share it with at least 5 people and execute on it, right? We're not gonna be allergic to execution, right? Right? I guarantee you 2024, ending 2024, you're gonna be unrecognizable. Your business is gonna be unrecognizable. Going into 2025, people are gonna be like, just literally, I wanna share something with you. My wife and I, we've been incognito for about 6 months. There was a lot of sacrifices that we had to make this year. Can I be transparent? I'm like the black sheep of my family right now. Because I had to say no. Certain things I had to say no. And it's okay for your family to have their emotions. but it's also okay for you to make the best decision that's gonna push your family forward. Right? There's something called survivor remorse, and we had it for a very long time. God will ascend us, and then we would do something to sabotage it because we were worried about everybody else. So I want to encourage you to focus on what God has for you. Stay tunnel vision.
Stay focused.
Keep him first. Stay tunnel vision, and he'll handle the rest.
Yes, absolutely. So we definitely thank you all for your time. I know they're going to put a QR code up. Feel free to text questions. Feel free to text bag to this QR code right here, right?
Yeah, so you text back to this number if you are needing assistance, some clarity. If you're like, you know what, I need to get my credit in order, text the word bag to this number, and we'll be around after. So we'll be outside. If you have any questions, feel free to walk up. We would love to, assist you any way we can.
Absolutely. Thank you all.
Thank you all.
Blessings
God bless
to you
you.
guys.
Won't you clap it up for them?
Oh, okay.
We could do better than that. Won't you clap it up for Brown Assets Group? Absolutely incredible. Thank you all
Thank you.
very
Thank you.
much. Well, we received a couple of questions we're going to ask so we all can learn together.
Yes.
For someone who has never had a credit card, where do you recommend starting?
Definitely taking out a secured credit card, okay? And you can do this directly with your bank, or you can do it through Capital One is a really good one because they're designed to help you establish a positive credit history. So you definitely want to take out a secured credit card, and typically the way that works is you'll be required to put in a minimum deposit. And so when, let's just say Capital One minimum deposit is $200, right? They'll send you that credit card, you'll receive it with your $200, but remember the rule of thumb, right? We're only gonna use 10% utilization on that credit card, right? You do that for 60 to 90 days, watch how your credit starts to increase and how you start to establish that positive history.
I'll add to it. If we exercise the group economics and we're sharing this with our family, reach out to someone that you know that has been responsible with their finances and ask them, can you be placed on one of their accounts as an authorized user, right? Just imagine if they have 15 years of positive history and you're in high school and you're like, hey, uncle, can I be placed on your account as an authorized user? Sure, son. That's gonna help. That's gonna help by default. So that's another way as well.
Awesome. Clap it up for them, everybody. Should you close credit cards that have annual fees that you're not using?
No. Simple answer, no. Because again, we're stripping away that history, right? We don't want to strip away that history. Now, again, everyone's situation is different, of course. So if you're in a financial bind and you're like, listen, I absolutely cannot pay the annual fee on that particular credit card, we don't encourage it, right? Because we want you to keep that history, right? Because understand, once you close that account out, not only is it going to strip that history away, it's going to significantly drop your credit score. So in a nutshell, we'll say no. Keep it open.
Thank you for that. Now, you talked about different types of scores. This question is, what is the difference between your credit score and your FICO score? Should they be similar, or is one more important than the other?
Well, it's going to depend on what your goal is, right? Because everybody's situation is very different. Now, if you're looking to purchase a home, the lenders are going off your FICO score, okay? So you have FICO 8, FICO 10, which is auto, home, so on and so forth. I will always encourage to focus on your FICO score because typically that's what the lenders are looking at, okay? So FICO score, but you can always read it on a Vantage score. It's just those numbers are going to be a little bit off because there's different modules of how credit is calculated or factored.
Yeah, so with your Vantage score, remember, it's designed by the 3 credit bureaus. So with FICO score, typically the lenders are looking at your rental history, right? That's how they're able to determine whether you're approved for a mortgage, right? So if they're looking at FICO 10 or FICO 8 or FICO 5, they're solely just wanting to ensure that, hey, how's this person's rental history? Or if they had a mortgage in the past, were they paying their mortgage on time?
Thank you for that. You talked about authorized users. Does your spouse or student debt impact the other spouse's credit if they're not an authorized user?
Repeat that one
So I
more
think
time.
they're asking if we're together, married, is your score automatically affect my score? Or is it only when I'm an authorized user on yours?
Let you go for that.
Yeah, when you're an authorized user. So remember, being added as an authorized user can definitely be an advantage, but it can also be a disadvantage, okay? Because if you are being added as an authorized user on somebody's account that doesn't pay their credit cards on time, their payments on time, their utilizations are always high, then that's not going to benefit you, right? It's only going to benefit you if, hey, this person has a healthy credit history, they pay on time, 35% of how your credit is factored, payment history, 30% utilization. So as long as they're meeting those factors, then absolutely that's going to help you. But as far as if I am adding him as an authorized user, right, then what I have is going to impact him. Does that make sense?
Yeah, not the other way
I'm, like,
around.
trying to think
And this
of it in my
actually
head.
happened when we first met. My wife added me on one of her credit cards as an authorized user. So essentially, it helped me, even though my credit score was still shot, but that's another story. But it did help me. So this is one of the reasons why if you are going to be an authorized user on someone's account, number one, that you trust them,
Yep.
right? Because it's going to hurt you more than it hurts them.
Yep.
Because, hey, if they haven't been paying their bills on time and their utilization is through the roof,
They're passing that bad history.
yeah, they're passing that bad history on to you.
You mentioned best practices related to home buying. Are there best practices for those who are looking to go for a new car?
Yes.
Yeah.
Get a credit union ASAP yesterday, right? Establish good faith with the lenders. Like, we make bank runs every single day. My wife would tell you, I go to the bank every single day. I want them to see this light-skinned face. I want them to see me. They may not know my name, but I seen that light-skinned dude. Oh, yeah. Because when it's time I've established those profound relationships, right, they're willing to work with me, right? So with credit unions, and I'm glad that's a great question actually, with credit unions, when you're shopping for a vehicle, never go to the dealership first, right? You go to the credit union and you get pre-approved through your credit union first. There's something called good leverage, right? And they're only gonna run you one time. And once you're pre-approved, you're gonna go back to the dealership with that check that your credit union has given you, and you're gonna go in there with posture. This is how you're gonna go in.
Credit very demure.
I only wanna be here 45 minutes. I know exactly what car I want. I don't wanna put no money down. And I already know I'm gonna have the low interest rate possible. That's called posture. Because what happens is 9 times out of 10, you go into a dealership, right? You exhaust measure, you're in there 4 or 5 hours, and 2 things happen. You end up driving off the lot with a car that you did not want, or you end up driving off the lot with the car that you drove in, which was your
Take your
car.
time.
So, or maybe Uber, I don't know. So yeah, definitely credit union is the way to go, and get pre-approved by your credit union. I had to add some theatrics in there, I'm sorry.
How do you manage scenarios when you pay your credit card down and the creditor reduces your credit limit?
That has happened. We've had clients experience that scenario. And what we encourage our clients to do in those cases is ensure that, number one, you you identify exactly your credit limit. So we've had clients where they're like, wait a minute, I started with a 500 credit limit, now my credit limit is 250, right? What you wanna do is you wanna reach out to your bank, to your lender, and identify it. There's several things that take place in that. Maybe lack of income, so maybe your income reduced, right? They also are looking at your credit history, right? They're looking at your history with them. Yes. They're looking at your payment history with them. So if you miss payments on your account, they're like, wait a minute, this person may not be able to handle this credit limit, so we're gonna go ahead and reduce their credit limit so it doesn't drown you, right? So those are, different scenarios.
Well, clap it up, everybody. Thank you all so much. Clap it up again. We're gonna let Darius and Jocana go out. They'll be waiting for you all in the lobby. They have a table that is available for you to sign up. And for those who are watching online, they're gonna make their information available for you. They are a resource. There's no pressure to join. There's no pressure to sign up. But for those who would like more information about the services that they provide, you could stop by and you could see them. Did you all have an incredible time today for the 818 conference? It was on Pastor Darius's heart to make sure that there was a space that was created to help all of us learn biblical principles and practices